So before you fall in love with a house, you want to make sure that you know where the finances are coming from. Today we're discussing the home buyer's guide to getting mortgage ready, which means the preparation, what it will take for you to get ready to have a mortgage. Chances are, if you're like most of us, you're going to have to finance your property. So you're going to have to deal with getting a mortgage and getting approvals prior to actually getting to searching and choosing for a particular house that you want. Hi friends, my name is Jean-Marie Ligonde. I am what you would consider your Miami real estate agent on YouTube. I try to tackle a lot of different questions. My objective is to provide as much clarity, as much information for anyone that is considering buying a property, or if you're moving up, or if you're relocating to Florida and you want to have any information about a certain area, I'd be more than happy to assist with these things. So in the Home Buyer's Guide to Getting Mortgage Ready, we break it down in 3 steps. Step number 1 is your FICO score. What is your credit score? Where do you fall in the range of the 300 all the way to the 850 FICO score, which will help you to get a lower interest rate if you have the higher score. The higher the score, the better interest rate you're going to get on a mortgage. So when we talk about the FICO score, it doesn't mean that if you have a lower FICO score that you're not going to be able to qualify for a mortgage. What it does, it's some sort of a classification in terms of which program that you will qualify for versus which program that you may not be qualified for. We have clients that actually qualify for FHA mortgage for a first-time home buyer program, a 580 credit score, and you qualify for only 3.5%, 3.5% down payment for an FHA mortgage. So a lot of times people are wondering, what is the breakdown for my FICO score? So the rate to the percentage that you need to understand is 35, 30, 15, 10, 10. So this is the breakdown for your FICO score and how they come up with your score. The 2 largest percentage points in your credit score has to do with your payment history and also the amount that you owe. So the first one is 35%. 35% is your payment history. How well do you pay your debt? Are you paying on time or are you paying later? So if you pay earlier or you pay on time, which is considered paying on time, that amounts for 35% of your FICO score. The other 30% is the amount that you owe. So say for instance you have a credit card for $100 for instance, and then you want to keep that at 30% usage of credit, meaning only $30 is the amount that you should be using on that to maintain a high credit score. So if you go above 30% in that available debt, then that's also going to affect your credit score because you're going to get points taken away because you're actually surpassing the 30% mark. Step number 2, we're going to have to figure out a plan for your savings, for down payment and closing costs, because you're going to have to come up with that amount of money for your savings, for your down payment. A percentage will be for your down payment, and also you're going to pay for your closing costs. I'm kind of repeating myself there. There are folks that still believe, that still think you need 20% to buy a property, which is not true. The whole confusion with 20% comes about is eliminating what's called the PMI, the MIP, so which is a mortgage insurance premium or the premium mortgage insurance. People flip those words however they want. But anyhow, if you're financing more than 80% of the value of the asset, then you have what's called the PMI, premium mortgage insurance. So that's where the 20% confusion comes into play, but you don't have to have 20% for you to qualify to buy a property or to buy your dream home. You can qualify as little as 3.5%. Once you sit down with your mortgage broker, they can review all these details with you. But as a real estate agent, I get to deal with it all the time, and I have to clarify and also help my clients understand what are the steps that it'll take for us to get to actually submitting an offer and actually shopping for a house, is securing the finances. Our team, we typically already have all these evaluations in place. We already have a mortgage evaluation done for our clients, and also we already have an estimated closing cost, so that way we have our clients have a very clear understanding of what are the fees and how much money that they're gonna need to come together, to put together in order for them to get to the closing costs. I can't talk today. And step number 3, which is gonna be, what is my home buying power? How much home can I afford? What's my home buying power? This is where your debt to income ratio comes into play. You may have heard that a lot of times people talk about DTI, debt to income ratio. It is where they're evaluating what's the amount of debt that you're carrying versus the amount of income that's coming into the house. This is the ratio that the bank will use to understand how much money that they're willing to give you to go buy this house. So your debt to income ratio is the bigger deciding factor in the whole process, if you will, because that's what's going to determine how much house that you're going to be able to purchase. Not to create too much confusion about the debt to income ratio, what is it going to take? The best thing to do is to actually sit down with a mortgage broker, get your pre-qualification in place, so that way you don't go and fall in love and look for a property before you actually know how much that you can afford. So in our team, the way we do it, we have a full evaluation that is done in our office. We have a very good understanding of what it is that you'll be able to afford versus whatever kind of debt. When we look at the credit history, our mortgage team will be able to provide you sort of a game plan to take a look at, okay, what needs to change, what needs to get paid, what needs to lower in order for you to get ready to get the pre-qualification in hand. Once you have a pre-qualification in hand, then you can actually go out and start shopping for a house, because now you know exactly where your finances are coming from. I want to thank you for taking the time to watch this video. My plan is to come with a lot of instruction and a lot of videos that we can provide a lot of information for folks that have not bought a property. We deal with buying and selling properties all the time. So for us, we take it as a second nature. We take it for granted, but we want to provide as much information as possible in order for you guys to be more informed, because a consumer, a buyer that is better informed will make better decisions. Check out these two videos, or if you can click on my face here, you will find at the end of the video, that will be the way to subscribe to this channel. And you can check these other videos where we talk about different topics that may be very, very interesting for your home buying process, whether you're buying your first house or you're buying a second property, which is another conversation we can debate. Look forward to seeing you soon. Thank you again.
Chaque fois n'a gaspillé l'argent. N'a payé caille pour mettre caille. Ligonde, Jean-Marie Ligonde. On va acheter caille facile. Jean-Marie.